Good morning and welcome to the BRAEMAR Shipping Services PLC preliminary results for the year ended 28th of February 2022 investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted any time via the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to James Gundy, CEO, Nick Stone, CFO, and Tris Simmons, COO. Good morning.
Good morning, ladies and gentlemen. My name is James Gundy, CEO of BRAEMAR Shipping Services. On my left is Tris Simmons, COO, and on my right is Nick Stone, CFO.
Good morning.
Morning. Now, Nick's going to run through the slides, but we're going to variously obviously go talk through those slides with you. We'll obviously, as you said, there'll be a Q&A at the end, and we'll go from there. So, first of all, I want to say, thank you, and obviously for the awaited accounts for 21-22, and obviously as we mentioned in our RNS. I think it's important to say just excellent for the business has been going according to plan and the strategy I had coming into the business back in January 21. I can say it's all working as far as we wanted to do. So excellent collective trading performance, revenues up, profit is up, transaction volume is up, and debt, of course, is down. This outperformance was due to us in outstanding personnel and our competitive advantages, optimized, resilient business model, and enhanced brand enabling growth. Motivated team, uniting and driving big changes. That we've all done for sure. Slide 2, Nick. Strategic steps. Successful delivery of non-core business, shipbroking corporate finance merged. Now, this was obviously a key factor for me, as I said to you at the very beginning in January 21 when coming in. I was very keen to remove the non-shipbroking business and focus on exactly what we knew and understood. Rebuilt the foundations, redefined strategy, strengthened balance sheet, on track to double profits by 2024. Our focus is generating more growth and enhancing revenue and profitability.
Right, so I'll cover the next few slides and talk a little bit about the results, and then we'll go back to talking about the broking market or the shipbroking market. So our trading results, as James has said, revenues up, profits up, margins up, all the indicators are heading in the right direction. And it's important to notice in this and also in our expectations for the coming year, that although the markets are positive for us at the moment, we've also had transaction growth. And although market share is very, very difficult to measure in this industry, the fact that we are growing transactions in last year when actually in some certain areas volumes were down is a good indicator that we are doing the right things opposite that market share. We've also had investments in people and technology, new offices over the last couple of years, which we are now seeing coming through in the positive returns and the increases in the main KPIs in last year and in the year that we're in. So then turning to the actual financial summary, underlying profits were up by 31%. The statutory reported profits were up by over 200%. I will talk a little more on the next slide as to what the difference is between those two measures. But the underlying operating profit, which is our key measure looking forward, was up by 31%. The forward order book, and that is business that we've contracted but not yet invoiced, was up by 15%. And has grown by another 14% since the year end. Operating cash flow was up by 61%. We have an increased dividend, which is covered 3 times, and bank debt has been reduced by 69%. So lots of very positive indicators within these financial statements. The stronger balance sheet we have enables this process to continue, whether it be via M&A or continued investment in people and technology. On the next slide, then, we'll look at the actual headline numbers. Revenue was up 21%. Important to recognise that the comparatives here have been restated to exclude Corey Brothers and WaveSpec that are included as discontinued operations in these accounts, having sold those businesses during the last year. Underlying operating profit was up by 31%. We've seen an increase in operating margin from around 9% to over 10% in this period. Now, I mentioned earlier the reported profit. This is the statutory profit, which includes the result of the discontinued operations. There is some 7.2 million in the numbers, if you look at the RNS, for profit from those discontinued operations. It's a mixture of trading profit from Corey Brothers and the disposal of Corey Brothers and our stake in an old business that was called BRAEMAR that was sold towards the beginning of last year. So 7.2 million in total. Around half of that was the disposal of BRAEMAR. There was something over 5 million of trading profit and disposal profits from Corey Brothers, and then there was a loss on the disposal of WaveSpec. WaveSpec, if you had looked at the numbers previously, was a loss-making business that we disposed of in March 2021. The next measure then on here is the operating cash flow, and that's cash generated from the continuing operations. So very strong growth in that during the year as well. As a result of strong operating cash flow and of the disposals in the year, our net bank debt was down to 2.8 million following the receipt of the first instalment of the Corey disposal. The transaction was completed on the 28th of January, and 6.5 million of cash was sitting in solicitors' bank accounts on the 28th, and therefore we weren't able to include it in our balance sheet. But that money was received on the 2nd of March, and the net bank debt we are showing here of 2.8 million was after the receipt of that Corey monies. The dividend for the year was 9p, up from 5p in the previous year. It was an increased dividend based on previous expectations that will be recommended to our reconvened AGM in October. Then finally on here, the forward order book, $50 million. Most of our revenue is denominated in dollars, and we'll touch on the impact of that later in the presentation. Up 15% from the prior year. I think we've stated in our release that it's grown by another 14% since year end. So the positive story in terms of that KPI continues. I will then hand over to Tris, who's going to talk about a little bit about the revenue split by desk within the business.
All right, thanks, Nick. I think on these pie charts, really the big demonstration here is where we were in 2016 versus where we are end of last financial year. That you can see, in 2016 we had a business that was very much dominated by deep sea tankers versus 2022, much more diversified pie chart, which has been through strategic investment by us in other products and growing headcount on desks. So I think it's fair to say, coming out of last financial year, that the only sector within that pie chart that we saw a fall in revenue was on deep sea tankers, which post-COVID deep sea tanker rates were extremely low, some of the lowest we've seen in over a decade. However, we still maintained a good revenue stream through that product. And actually increased our transaction volume by 25% during the year, most notably due to new hires that we had made in the previous year in establishing a Geneva office that specialised in clean tanker broking. If we move on to the next largest sector, dry cargo, dry cargo was a year of extreme volatility. We saw Capes trade up to a high of in excess of $85,000 and then back down to a rate that was low as $5,000. I mean, certainly the transactional volume that we did increased through the year. We did benefit from the higher prevailing rates at the beginning of the year, but the revenue maintained fairly constant throughout the year, despite that big amount of volatility within those rates. Moving on to our other sectors, sale and purchase, obviously another huge area of business for us. Some real sort of constraints within that business on the new build side through lack of availability in yards. But the flip side of that has been an extremely busy second-hand sale market, which again enabled us to post near record revenues within that sector, and certainly that trend has continued through into this year, which I can give you a breakdown on where we are so far on all of these sectors for the first 5 months of this year. Offshores and renewables. Again, oil and gas industry and renewables, very, very busy coming out post-COVID. We saw double-digit returns year on year for that sector, us as a business. Securities, we invested very heavily in a dry FFA business and associated technology, which during the year we saw revenues increase by as much as 400% year on year. So a very worthwhile investment. Corporate finance, all credit to what we've mentioned earlier in the integration of corporate finance with the shipbroking business model. A lot of transactions were completed in unison with our S&P desk, basically capitalizing on the S&P's customer base and the corporate finance's skill in restructuring within that business. Finally, moving on to specialized tankers. I mean, specialized tankers is a very broad sector for us, but I think the most notable gains in revenue for that year, and certainly coming to this year, were through LPG and LNG. LNG, we had various new vessels that were delivered last year, plus some long-term charters that we were doing for a couple of customers that we regularly work with, that have continued through over the next 5 years. LPG, we have some good relationships that enable us to do long-term charters on some of the larger vessels, which has continued through this year as well. And without going into too much detail about how we're performing so far this year, I think for most of the segments within there, the biggest change has been in deep sea tankers, where we've seen rates go from a decade low to a 300% to 400% increase on some of the vessel sizes, which I think we could possibly see a swing between the deep sea tankers and dry cargo percentages within that pie chart, but still dry cargo, even with what I would say are more normalized rates this year on year, in the first 5 months, we're still looking at revenues being up in excess of 50% versus last financial year.
Cheers. I've got some KPIs.
Yeah. So next page then is our headline KPIs that we publish regularly. I think it's probably important to recognise that the most significant KPI we have, and James mentioned earlier, is to double our operating profit over a period of 4 years rather, and that started with the operating profit measure of 8.9 million in 2021, which included the Corey brothers' profit, and therefore a target of 18 million within those 4 years. So that's the overarching KPI. Within this chart, you can see some of the constituent parts. We track revenue in dollar terms. Clearly, the foreign exchange rate has a material impact on how that's measured in terms of sterling, but it's important that we measure it in dollars so that the core message outside the exchange rate is clear. We also record and review the revenue per head. It's very important to recognise and to monitor how the individual brokers and teams are doing. and that then flows into the operating profit margin, which again we've seen an uptick in the current year and expect to see continuing in the next 2 years. I mentioned the forward order book previously, and although you can see in most of these measures a little bit of a downtick post-COVID as volumes dropped off, the last year and certainly in the current year, all of these indicators are now going back in the right direction. And then the final chart is on our total leverage. This was very important a couple of years ago when we weren't paying a dividend, and we'd indicated that we would look to see the total leverage to EBITDA ratio below 1.5 times on a consistent basis before we return to a dividend. And you can see therefore the direction of travel in that. I think that measure last year, I think, was well below 1 times, and hence the decision to restart paying dividends last year and continue with some dividend growth in the current year. I will now hand back to James to talk about the shipping market outlook.
Yeah, I think this slide here is important for you to understand, because shipping is, I've been doing it for some 35 years in the shipbroking world, and I haven't seen shipping this exciting as a forward projection for whatever. So there's so many fundamentals here, whether that be to do with ESG, whether that's to do with the fact that we've probably seen a 30% shrinkage of yard capacity since 2008 in the last crash, and the fact is that the fleet is aging, thus potentially looking it's a stronger position. Also, it's worth bearing in mind in 2008, it was a lot easier to contract a new building because probably you were able to borrow 80-90% of the value, i.e. loan to value, as opposed to now it's more like 60%. So there's a lot more equity being put into the ships. So what does that suggest? That suggests that the freight rates will maintain strong, which is obviously good for a shipbroker with stronger rates. And I feel so for that, and I think that presently you can get a new building probably now it's 2025 going into 2026, and there's a large amount of ships being potentially hitting a certain age. That's going to obviously impact on that recycling business. So we'll see a lot of vessels going to the beach, as we say. So at the moment, as far as that's concerned, I think you can see that in the next page. I think the next gives you a bit of that. So here's just showing you what's been happening. I think you can say now everyone's hearing about the container market out there for the last couple of years. Yes, I mean, since COVID struck, the container market went through the roof. That already was a fleet that was very aging. So it was a rush to the yards to build more ships against long-term contracts. That's also a fleet that is under pressure for emission-free, because the likes of Amazon, Nike, all these companies are trying to move their goods carbon-free. So we've seen a lot of dual fuel ships being built. That's taken away even further capacity, so it's not allowing dry cargo and tankers to build. Thus, the curve starts going the other way as far as ships. As you take the tanker market in 2008, we were seeing 85 million barrels a day at OPEC. That fell to low 70s after the crash. It went to a new high of like 105 million barrels per day pre-COVID, fell back to mid-80s. Now it's back above the 105. So you can see where the sector's going and what's happening. So at the moment, and in dry cargo, that's also an aging fleet because that was overbuilt in 2008. Now we're now seeing ships go to be recycled after with the rates coming off again. And even in the offshore market, and that's amazing. That was definitely hit massively as the oil price went to negative, and we saw a lot of vessels being also taken out of the fleet, and that hasn't been replenished. So, if anything, this builds for a future of stronger rates. Obviously, stronger rates for a shipbroking business, it's important, and I think that I'll say towards the end statement as well. You know, because shipping is cyclical, and it's hard necessarily even sometimes for ourselves to work out which is the right market to. But with the shipbroking business like ourselves that covers every sector, then you're pretty well hedged out by investing into a shipbroking business. I think we can go to the next slide. I think this is basically showing you the order. I mean, LNG is obviously a sector. I see there's been some questions on LNG. I mean, LNG has definitely been a sector that we've been very much involved in. We've built our desks, within London, Geneva, and Singapore. We've been very much involved in new building contracts. Those prices are pushing to very high numbers of $240 million per vessel. So these are big transactions for us to do. As these commodity prices I see, you're mentioning there, hit new highs. Obviously, other commodities come to replace those commodities. For example, it could be coal, it could be oil. All these we're involved in, and in fact, our coal desks had record years as well. So that's roughly where it is. And these are worth reading that, and there's even further information on our preliminary results as well on this. What are we going here? Now, this is important. This is an important factor, I think, because everyone asks a question and everyone knows, being in the public arena, it's all about the growth and making sure we're making strategic moves in the right direction. So I'll let Tristan explain a bit more about our growth strategy and where we need to build and what desks and global offices.
Yeah, thanks, James. I think first of all, I mean that table is fairly self-explanatory. If I try and say what we've done so far in the last 2 years, I think identifying products that we don't have good coverage on, and also regions where perhaps we're not covering those customers in the best way we possibly could is key to building our business, and we have done that. If we look at obviously London, we're fairly well covered on most products. I think we do have scope for to do an increased spread of derivatives, however, potentially away from shipbroking, and there are some synergies with other products that we can certainly capitalize on, and we're looking at those. In Europe, I think the most notable changes that we have had in the last few years is that we opened an office in Geneva. We had a bit of a hole in our tanker business on clean tankers. We successfully hired a team of half a dozen clean brokers. That certainly contributed a lot to that transactional increase in volume for last year of 25%. We've also we have two very senior dry cargo brokers sitting in that office in Geneva. Aside from Geneva, we opened an office in Athens. Obviously, Greece is a very owner-centric business for us. We felt the need to have a presence there. But since opening it as a satellite office for the S&P desk, we've diversified into other products. We have a container broker, and we have 2 Panamax brokers now in Athens, all successfully transacting with people that we wouldn't transact with before. The Middle East, I think there's a real shift in trade pattern taking place at the moment. I mean, where traditionally we had a very small office in Dubai, I think us and a lot of competitors are starting to grow that presence in Dubai. I think that the ability to transact with customers based in the Middle East is increasing. And I think, rather than traditionally we would have had people sitting in Singapore, attempting to do a little bit of business, I think that we see the importance of having people locally to actually engage those customers locally. And that's something that we have done. We moved into a larger space in Dubai, and we have more brokers there covering different products. The big, obviously APAC. I don't know if many of you are familiar with the fact that we have a very successful dry cargo business in Australia, probably one of the largest transactors on certain vessel sizes there. They continue to grow their business. Likewise, Singapore, we're very fortunate that we have a well-respected senior MD running that office for us that certainly has been able to get us entry into new products and hire new brokers. The most notable, I suppose, opportunity here on this board across all of these products is the Americas. Sort of steps that we've taken to change that are in process. We have various potential partners that we want to work with. We recently opened another office in Houston, which we have 4 people working on veg oils there, which was a new business for us. We have a US flag business in the States. I think so there are notable holes in our business that we are looking to fill. And as I said, we have various partners that we'd like to work with on that.
Good. Right, I guess we can come to concluding of our presentation. It's onwards and upwards. We're obviously on track to double the underlying operating profit to 18 within 4 years, as promised in October 21. We feel confident about that. Growth in fixtures volumes, that's uncorrelated with market rise and generating alpha growth. This is also proven. Enhancing BRAEMAR's brand in office and people, launching as sustainable offering. Strong balance sheet. That was obviously very, very important to me to get that debt down. And built for growth for M&A. Good pipeline opportunities available. So, yeah, Nick, so I'll do this. I'll do this. Yeah.
Happy to do that, James. Yeah. So mentioned previously, the forward order book is up a further 14% from year end. We're seeing volume growth. It's an important factor within these results and our forecast for the current year. And we've seen the product diversification that Tris has talked about in some detail, and all of that reduces the exposure to the natural cyclicality within the different elements of the shipping market, and improves our economies of scale. That increased scale and the focus strategy it gives us an ideal position to seize the opportunities that are clear to us. And again, Tris has talked a little bit about that. We gave a separate trading update yesterday morning with the results, which made it very clear that our results for the year to February 2023 are going to be much stronger than last year and stronger than previous market expectations. We've given a clear indication of an operating profit of at least £20 million. Within that statement, we also disclosed, though, that of that 20 million, 5 million is attributable to the strength of the US dollar at the moment. And if you look at a core underlying operating profit of 15 million on a more normalized US dollar exchange rate, and in terms of our ongoing KPIs of growing the business and doubling to 18 million, it's why we're not declaring a victory on that just yet, because we need to get the underlying operating profit on a more normalized basis up to that level, so that we effectively have a range which is underpinned at that 18 million level.
Right. Thank you, everyone. Yeah, so now I was going to conclude. So thank you, obviously, once again for taking time to listen to our presentation. I like to think you fact that we have some questions. I'd like to think the fact that there's going to be some questions coming across. I'd like to think that we've turned the business around and we're pushing the business forward. So let's have some questions here, guys.
Fantastic.
Yeah. So first one is.
I was going to say, Nick, just in case you've got quite a few that have come through, I was just going to say, ladies and gentlemen, do please continue to submit those questions. But just while Nick and the team take a few moments to review those, we'd like to remind you that a copy of the slides along with the published Q&A can be accessed via your investor dashboard as well. And Nick, if I may just ask you just to read out the question where appropriate to do so and just distribute it to the team, that would be great. And I'll pick up from you at the end.
Will do. Thank you, Paul. So I guess this may be initially for Tris, but James also. How do the increased commodity prices impact the business, and what impact has the gas crisis had?
So I'll start from a commodity perspective, and then James can give you more detail on how it's going to affect the shipping market. But obviously, the biggest shift that we've seen in commodity price is the inversion between JKM gas prices, so the delivered price in Asia versus the European gas price, which I think we've seen a €3 switch in that arbitrage that was open, the arbitrage to the east now closing. I think the big problem that we have here is actually getting your hands on gas to be delivered in Europe, and or I'll let James answer this next question. The availability of fleet to move that gas when it's available.
Yeah, I mean, look, you'll see. Obviously, any commodity price of any sector moves to all-time highs. Obviously, there's a degree where you will move into different commodities to take that shortfall. But as far as gas, and we're already seeing it, it's on the it's in the newspapers, it's everywhere. The fact is that obviously what Russia's doing to Germany, and of course Germany have got to move now strategically to protect their position. And what's the alternative? The pipeline's closing. Their alternative is to take LNG in shipping formats, and that's obviously what they're trying to do. So that's only a positive to us because it pushes the rates up, and of course, and obviously higher rates on the fixing is obviously better for us as a broker to take that position through. But obviously, we are seeing a lot of shipbuilding side being built as well on LNG. So yeah, at the moment, commodity prices moving to highs. It's obviously, it might affect one sector because it gets to a certain point where it's too high to be shipped. But then, of course, that falls into a different sector. It's what I mentioned at the very, very beginning, because we cover all these sectors. One goes up, one goes down. And of course, having a securities desk, derivatives desk, these guys are trading non-stop on the back of either a market falling off or going up. So anyway, I hope that answers your question.
I think just to add to that, James mentioned earlier that we'd seen an increase in activity on our physical coal broking, and I think that's very reflective of the high gas prices and a move by utilities because they have the ability still to actually burn coal instead of gas, and obviously coal potentially being more readily available and easier to transport.
Yeah. Okay.
So that next question is very closely related, and in fact, it's probably been partially answered. But it's the fact that Europe will be importing more energy by ships in the coming years. How will it impact your business?
Okay, it's only a positive because with what's happened at the moment and recently, and I don't like labouring on the fact that there's been atrocities at the moment within Ukraine. But the fact is, a lot of products have moved out of the Baltic Sea into Europe. Now, obviously, with those embargoes and sanctions being in place, that oil product has to come from elsewhere. That could be from South America, from even from the Middle East or Far East. So that's going to create a longer haul movement, which is obviously beneficial for us as a company, and obviously beneficial for shipping in total, because ton miles is obviously is good for shipping.
Okay, thanks, James. Next question I will answer is how much of the 31 million accrual in note 4 to the accounts is accrued bonus? And reality is that the majority of it is. For those who haven't been involved in this discussion before, we pay 65% of desk operating profit out in bonus, and therefore, in a successful year, the bonus accrual on the balance sheet at the end of the year will go up, and clearly in a less successful year, then that element of cost acts as a bit of a shock absorber. We do pay some bonuses in the middle of the year for certain desks, but the majority of bonuses are accrued during the year and then paid post year end. So the answer is the great majority. Next question, James, is how do you expect M&A to play a role in achieving your growth targets, or will you look more organically in order to keep the debt ratio down?
I think to answer that question, it's going to be a bit of both. what you need to understand, and obviously the big M&A deal was 6 years ago when BRAEMAR and ACM merged. It's these big mergers are never easy because obviously there's a culture difference. So it's obviously, I'm very aware of how that do. But the fact is, the business has now got into a position now. I feel it's strengthening and feeling strong. The balance sheet's strong, so we're becoming more attractive. The business is about consolidation, so that's already, we can feel, we see the approaches coming to us. Obviously, being in the business for some 35 years, I'm very aware of what's right and what's wrong, and Tris too, being in the derivatives market for the same sort of period. So I think we'll be able to attract some star players, as we have done already in the last 3 or 4 years. But I feel we're even stronger now. So small M&A deals are potentially on the horizon. That's one thing we're looking at, and key hires. And down the line, who knows what's the right move to do? Whether we look at a bigger deal or we don't look at a bigger deal. But at the moment, we're feeling pretty sweet, and that's where we are at the moment, and we'll take advantage of that.
I guess the only thing to add to that, organically versus acquisition, the scale of the acquisitions that James is talking about are immediately bottom line accretive if they took place.
Yeah.
Which is different to trying to grow something organically. The investment line straight in there, but again, they're straight to the bottom line on the additional profit that comes through.
Exactly. Okay. Well, thank you, guys. Any other questions?
Well, yeah, we have one final question, which again I will answer, is how much of the receivables is staff loans? And the answer is virtually nothing. We do have some season ticket loans, but otherwise we're not in the business of lending staff money.
Right.
I was going to say, you've literally covered off all the questions there, guys. So look, thank you very much indeed. Of course, any further questions that do come through, the team will be able to review those, and we'll publish the responses on the Investor Meet Company platform. James, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to you and the team, I could just ask you for a few closing comments, please.
Yeah, no, not at all, not at all. I suppose, as I said before, and thank you for taking your time to listen to our presentations. I'm hoping that BRAEMAR becomes on your radar. I like to think that the business has turned around in the last 18 months. I can assure you that the management team here is very, very focused. I've probably got a lot of colour here on this presentation that shipping is in a very good place. It doesn't feel like it's a quick bounce. It feels like there's more longevity to that. And secondly, I think there is some exciting things in the pipeline for us. And I think it's just definitely worthwhile for you to keep an eye on what the stock's doing. I think at the moment we're in a good place. That's all I can say. Thank you once again.
Fantastic. James, Nick, Tris, thank you indeed for updating investors today. Could I please ask investors not to close the sessions? You'll be automatically redirected to provide your feedback in order the team can better understand your views and expectations. It's only take a moment to do so, and I know is greatly valued by the team. On behalf of BRAEMAR Shipping Services PLC, I'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning to you all.
Thanks a lot. Thank you.
Thank you.
Bye.